If you are going to sell your home and think the property value, or you know the property value has increased, watch this video to learn more about how paying taxes works when you do actually go to sell your home. Just want to start off by saying that I am not a qualified tax professional, CPA, tax lawyer, etc. If you have any specific questions, definitely reach out to one of them. This is more of just like a high-level overview about taxes when you do go to sell your home. When you go to sell your home and you are selling it for more than what you paid for it, you could be subject to paying taxes on the profit that you're making from that sale. The good news is that typically, not all the times, but most people avoid paying that capital gains taxes on the profit of their home depending on a couple things and a few IRS rules. One of those rules is that you can exclude a certain amount of that gain from your income. So if you're single, you can exclude $250,000 of capital gains on that sale. And if you're married filing jointly, you can exclude up to $500,000 on the real estate sale. So for example, if you bought a house 10 years ago that was worth $200,000 and sold it today for $800,000, your net profit there would be $600,000. And also say that you're married filing jointly, $500,000 of that gain might not be subject to capital gains taxes, but the other $100,000 could be. So there's a lot of different scenarios where you might have to or not have to pay capital gains taxes on the sale of your home. And here are a few scenarios when you might be subject to paying 100% of the capital gains taxes on it. First one being if the house isn't deemed as your primary residence. If it's an investment property, there is potential that you would have to pay capital gains taxes when you do go to sell that. The second one being if you do own the property and deem it as your primary residence, but you've lived in it for less than 2 years in a 5-year period, then you could be subject to paying capital gains taxes when you do go to sell it. The third one being is if you don't actually live in the house for at least 2 years inside of the 5-year period. It does have some factors where that might not always be true. If you're involved in the military somehow, or a few other factors. If you look at the IRS publication 523, there's more details where you can read into that. Fourth one being is if you have already claimed the $250,000 or $500,000 exclusion of paying the capital gain taxes on another home in the 2-year period before the sale of your current home. The fifth one being you bought the house you're trying to sell through a like-kind exchange. So basically it's when you're swapping an investment property for another investment property, could be known as a 1031 exchange, and that had to have happened within the past 5 years. I think another thing to be aware of is if you are inheriting an estate from someone who has passed away or something along those lines, whatever the situation is, I think it's important to at least have a general understanding of the taxes you might have to pay when you go to sell that property, or if you're planning to hold on to that property for a while and then sell it later down the road. So if there are any CPAs, tax professionals watching, comment below, but I believe this is correct. So if I inherit a property from my dad and say he bought it for $100,000 and when he died it was worth $200,000. So I'm inheriting a home from my dad that is worth $200,000. And I go to sell that home basically right after he passes away. I don't want anything to do with it. I'm not subject to paying that capital gains taxes on that $100,000 gain. But if, say, I hold on to the property for another 2, 3, 5 years or something like that, and it gains $50K in equity, so now it's worth $250,000, I could be subject to that paying capital gains taxes on that $50,000 after I inherited the property. Again, this is just kind of a high-level overview of what taxes could look like when you do go to sell your home. If you have any specific questions or anything like that, definitely reach out to a CPA, tax professional, or what have you. So I hope this video was helpful and brought some value to you. If you haven't already, please like and subscribe for more content like this. Thanks.